Whenever they tariff us, other countries, we will tariff them. That's reciprocal, back and forth.
Shares posting their worst month in more than 2 years.
America's biggest technology companies lost some $750 billion in all.
President Donald Trump has recently implemented sweeping tariffs aimed at restructuring global trade dynamics in favor of the United States. These measures include a minimum 10% tariff on all imported goods, with higher rates targeting specific countries, 25% for allies like Japan and South Korea, and over 45% for export-reliant nations such as Vietnam. Stock market volatility. The introduction of these tariffs has led to significant declines in global stock markets. Major indices, including London's FTSE 100 and several Asian markets, have experienced sharp drops. For instance, Hong Kong's Hang Seng Index fell by 13.2%, marking its worst daily performance since 1997. The Organization for Economic Cooperation and Development, OECD, warns that these tariffs are slowing economic growth in the U.S. and globally while reigniting inflation. The OECD projects U.S. economic growth to decelerate to 2.2% in 2025 and 1.6% in 2026, with inflation rising to 2.8% in 2025. Emerging markets are also affected. The OECD forecasts a slowdown in economic growth across emerging G20 economies, with India's growth expected to be relatively resilient at 6.4%. China has vowed to implement countermeasures in response to the U.S. tariffs, condemning them as unilateral and groundless. This escalation raises concerns about a potential intensification of the trade war between the two largest economies. European economies, particularly those heavily reliant on exports like Germany, are apprehensive about the adverse effects of U.S. tariffs. Analysts warn of potential recessions and significant GDP losses in the Eurozone. Sectors such as automotive and chemicals, which represent a substantial portion of European exports to the U.S., are particularly vulnerable. Companies like BMW and Mercedes-Benz have already experienced stock price declines in anticipation of reduced export volumes. The tariffs threaten to disrupt established global supply chains, compelling companies to reconsider their manufacturing and sourcing strategies, potentially leading to increased production costs and consumer prices. In summary, President Trump's global tariffs are instigating significant economic shifts, marked by market volatility, heightened inflation, and strained international relations. The full extent of these impacts will depend on the duration of the tariffs and the responses from affected nations. If you found this analysis insightful, make sure to hit the like button and subscribe for more deep dives into global affairs. Don't forget to turn on the notification bell so you never miss an update.